Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thanks, Tom. Good to be here.
All right, so we're talking retail. It's all about retail this week. We've seen some pretty decent reports. Home Depot, Walmart, Target lagging a little bit, but it made a big move yesterday. And Lowe's is doing okay. Now, in this segment, Kohl's, I think there's probably a lot of shareholders out there that are going, why didn't you take the $60 or $65 buyout price? Because this stock's been getting hammered down over 30%. What's the outlook and what kind of data are you guys seeing out of LikeFolio going into this report? Because it might be an execution type of quarter for this type of company where if you didn't manage inventories well and maybe your consumer on the price level isn't shopping as much as maybe somebody at the high end, you might be in trouble here.
Yeah, you're right. I mean, they have a different, a different level of consumer. And when we look at the data, it's pretty interesting because Kohl's is, you lump them in with companies like Macy's and Dillard's and even Nordstrom. And right now, they're kind of at the top of the pack when you look at those in terms of purchase intent, move, and improvement. Again, this is improvement. And so that's what we're looking for. And I think that's what people, generally speaking, are looking for on earnings calls is how have you improved? And so they're more to the right than the others. They're not as high as Nordstrom, but and that is a measure of happiness, but they've actually improved more than the others. And I think that's a big thing. So one of the drivers of that is actually back to school shopping. So as a trend overall, this year's back to school shopping, not Kohl's specific, is about plus 23%. But when you look at Kohl's specific back to school shopping, it's about plus 58%. So they are outperforming on back to school segment far above a trend that's actually increasing quite a bit. So there's a lot more parents, talking about getting their kids new outfits and going out there and shopping. But it seems to be the increase is more heavily weighted in Kohl's stores. They do have other trends in their favor. In-store shopping is up 19%. Mall shopping is up 17%. Even e-commerce is up about 17%. So they've got a lot of trends that are kind of propelling them. When you look at those trend numbers, they're about in line. It's the back to school shopping that they're actually outperforming in significantly that I think that's kind of catching our attention. Also, if you look at that partnership with Sephora, which I think when we talked about on the show, we always compare it to the Target and Ulta partnership, and that one makes sense. The Kohl Sephora one is kind of unusual, but on their last report, they talked about it specifically. And if you look at their same store sales, I think they were down about 5% across the board, except for the 200 or so stores that had Sephora, and those were up a little bit. So it's actually proving to be a net positive for the company. And so they're rolling out more. They've got about 1,100 total stores, and I think maybe 20% of them right now have Sephora in them. So they're talking about adding hundreds and hundreds of those partnerships. So, they're innovating in a way that I think the three of us all kind of scratched our head at, but it seems to be paying off. So I think we were wrong there and they were right. And it looks like this is a company that was, I think that they were on their way out, but maybe they're starting to turn around a little bit. Maybe the bottom might be in on this company, and maybe not necessarily from a stock perspective, but on a revenue and, declining growth perspective. When we look at the earnings score, they're coming in at a plus 32, which again, very similar to that scatter plot. It's all about the change. It's all about the acceleration one way or the other. So it's not that this company is crushing it. It's just that they're improving. And I think that that's what investors are going to want to hear is that there's improvement happening. And this is a not dead type of company, and they're on their way back.
All right, Landon, we have to talk about a couple things here. And the first is, if I'm a attorney for Nordstrom, and I hear you compare Nordstrom to Kohl's, I'm going to sue you and give you a cease and desist order. Because hold on a minute, if they're ever how are you comparing JW Nordstrom and their high-end goods to Kohl's? That seems like a stretch there. Now, Dillard's I get, Macy's I don't even get that one, but Nordstrom and Kohl's is a stretch. Now, the second thing. Back to school. can back to school be enough to save these companies? Because all the data we're getting, back to school everywhere is really strong. Is that enough to make this stock go higher?
Well, in the short term, I don't think so. It's such a small segment. It's just it's a few weeks where parents go by and buy a bunch of stuff. But I think if the argument is that they're going to make is that the fact that people are coming in at a much higher rate than the average increase across the industry, indicates that those parents are more likely to come back as shopping for themselves and shopping for other people in later months, right? So it's not, obviously back to school shopping is a pretty short window and it's not going to turn the whole year around, but it could be an indicator that they've got a growing customer base and that people are coming back. And I think a lot of it has to do with their shift. They've talked about how they're shifting from a department store to more casual and athletic clothing, and that is about 1/4 of their revenue right now and growing. I believe they're beginning to turn it around. Agree, the Nordstrom comparison, a little bit of a stretch, but the Dillard's comparison is not, and they just crushed it. I mean, they just came out and rocked the house on earnings. So the fact that we've got Kohl's a little stronger than Dillard's is a pretty good sign considering what Dillard's just did. So I'm not super bullish on this company. But I am saying that the decline looks like it is leveling off and maybe starting to improve, which in LikeFolio terms, we're always about measuring that sort of that derivative movement or the acceleration, if you want to call it that. What's the change? Which direction is the change going? And the change is clearly positive. Again, it's only a +32 on our earnings score, so it's not a home run. It's nothing, you're not pushing your chips in. But this is one that I think investors are going to be happy with the earnings call. It's probably going to be a little bit more upbeat and positive. And so with +32, again, this is a company that's been basically cut in half in the last 5 months on their market cap, down to $34 now. And I think that we could be establishing a base of, a little bit of an optimism where investors may be saying, you know what, this company might not be dying. They may have some time left to turn things around.
Yeah, and I mentioned I think it's going to be execution also by the management team. But think about this, Landon. We've talked about it with other retailers where the consumer is starting to trade down, right, due to the inflationary pressures. And we saw that in some of the Walmart data. Target also, where, hey, maybe they're not buying the electronics and some of the apparel, and the grocery business is doing well, but now consumers are starting to trade down. So do you see any data where maybe somebody's not going to Nordstrom right now and maybe they're going to Kohl's to get clothes due to the new products mix they have, but then also because of inflationary pressures? I mean, Nordstrom's that mid to higher end consumer. Can't they trade down to a name like Kohl's?
Not according to Kevin, but I think that possibly. I mean, I think it's a stretch, but the fact that you see this surge in back to school shopping, and again, back to school overall +23%, Kohl's specific back to school +58%. So Tom, I think this supports your point that parents they're squeezed right now. They're seeing inflation crushing them. Their dollar's just not going as far, so they're trying to figure out a way to make it go farther. And maybe it's the case that they're willing to put their kids in a little bit cheaper clothes and go to Kohl's, but then they go shop at Nordstrom. I don't know. But overall, they're definitely considering these cheaper options, and Kohl's is the beneficiary right now. It's all coming down to those macroeconomic pressures that are being put on the consumer, and Kohl's is positioned to benefit.
Yeah, maybe I should start doing that. Make my kid go to Kohl's to start getting some clothes back to school, because it's
sleep with one eye open.
It's getting expensive out there. All right, Landon, great stuff as always. Enjoy the data. +32 on Kohl's going into their report. Appreciate it. Have a good day.
Thanks, guys. You too.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down the data on another retailer.